Without doubt, the hardest hit sector of the commercial real estate industry is the hotel sector. And also, without doubt, the single most influential company in that industry is STR. So my guest today, Vail Ross, Senior Vice President of Global Business Development and Marketing at STR, is going to be of particular interest to you if you want to know what's going on with hospitality as this whole COVID crisis plays out. Adam Gower here, and welcome to the GowerCrowd.com podcast, real estate crowdfunding syndication in the digital age. And if you don't already know, STR gathers and distributes vast amounts of data from the hotel industry, analyzing all measures of performance metrics. And in fact, the hospitality industry has come to depend on STR reports to gauge performance. And so influential are they, the reports, that banks actually require them as part of any loan underwriting. So being responsible for business development and marketing, Vail provides some fascinating insights today that are supported by some amazing statistics, like the percentage of hotels under construction that continue being built, or just how much revenues have dropped industry-wide, to name but a couple of fascinating metrics or statistics that you're going to hear about today. Plus, Vail also talks about communications and marketing during life in the day of COVID-19 in the hospitality industry. So today's podcast is especially interesting. You can find links to Vail and to STR and to all the resources that she mentions during the podcast on the podcast page for today's episode at GowerCrowd.com, where you can also find links to the deeply discounted investor acquisition system master course. If you are interested in taking advantage of that COVID-19 special, please be sure to do so as soon as possible, as we're going to be ending the promotion as soon as the shelter-in-place restrictions are lifted, and that appears to be rolling out every day, right? So hurry up if you want that special discount. You can find access to the master course on both the Gower Crowd homepage and the podcast page for today's episode. Also, of course, at GowerCrowd.com. Okay, enough of that. Listen in as one of the country's foremost experts in the hospitality industry shares her insights, data, and predictions for what's happening in the industry, where opportunities may lie for investors, and best-of-class marketing observations from an industry that is currently under siege. Here she is, Senior Vice President of Global Business Development and Marketing at STR. My guest today, Vail Ross.
And video and voice, correct?
Yes.
Okay.
Yeah, I do.
I'm going to do my best that one of my animals does not jump up or...
Oh, you're at home! I didn't occur to me, of course. That's right. All right. Yes.
We're not working in any offices. We are not. So we are from home. And yeah.
I have to tell you, Vail, just don't let me get me wrong or anything, but you remind me sitting there. Most of the people that I talk to look like they're at home.
Well, I've had to do a lot of these, so I'm trying to at least look professional enough, and every day get up and shower and put on a little makeup at least.
Well, I was going to say, you remind me of Leave It to Beaver's mom, who, you remember from your beautiful string of pearls when she was doing all the housework.
Yes.
So definitely
we have to keep it a little bit fancy.
Definitely a lot further ahead than 99 anybody else that I've actually interviewed that I can think of. So thank you so much for being so wonderfully prepared. Vail.
Thank you.
You are Senior Vice President, Global Business Development and Marketing at STR. And almost exactly 3 years ago, I had a wonderful conversation with Amanda Height. She was one of my first podcast guests during my first series.
Mm-hmm.
And you and I chatted about this before we started the podcast today. So let me ask you, I know you listened to that. Thank you very much for listening to it. Let's start off with how the world looks different. And I think that's fairly obvious, but I'd love to hear it from your perspective than it did 3 years ago, based on what Amanda was talking about. And she actually made some very interesting points, as you know, during that. And in what ways actually are things the same?
Very good. Well, first off, thank you so much for the invitation, and I'm delighted to join you and speak to you today during these very interesting and in some cases dire and in some cases beautiful times. So thank you very much. So a couple things that popped into mind of what's different. Obviously, when you were speaking with Amanda, one of her comments was that we are growing and building and opening more hotels than we ever had before. And the good news is that we were selling more rooms than we have ever sold before. Well, that right now is not the case. We are temporarily closing more hotels than we have ever closed in the history of STR since we've been collecting information. Currently, right now, our hotel supply is down 12% as of April. So a lot of hotels are temporarily closed. And obviously, from a demand standpoint, the demand is down significantly. We have experienced demand loss in astonishing numbers, to the extent of having demand down in April, just the month of April alone, over 68%. So those are two items that out of the gate are absolutely not in the environment that we were in when you spoke with Amanda. One of the things that is quite interesting, however, is that when you look at our construction pipeline, so all of the hotels that are currently under construction, that has not slowed down whatsoever. We have actually exceeded our prior peak back in 2008, where we had over 200, I think if my memory serves me right, it was 211,000 rooms under construction in December of 2007. So it was right before the market fell in 2008. As of April, we have 220 plus thousand rooms currently under construction. So we are still continuing to build in this environment, which I think says a lot of the confidence that this asset class does have from an investment community. You know, we will come back. It's going to take a lot longer than it's taken in the past, but to stop these projects right now appears to not be an option, and we're not seeing the pipeline slow down.
So what is Vail? What is 200,000 rooms as a percentage of the total supply? It's
so
right proportion, yeah.
So right now, well, of the total supply, we're looking at about a 2% increase to what our existing supply is today, which is on average what our growth rate is. So if we look at all the hotels that are currently open, what will likely open today, we'll see a 2% increase in supply, because that 220 are not going to all open this year.
Right, exactly. So why are they still under construction? I mean, is that, you know, there's always this expression during downturns, I've always thought of developers like to continue digging themselves into a hole, basically.
Yeah.
I mean, I don't want to be too gloomy. We've got to look at the bright side, and we'll get to that. But tell me, why is that continuing?
Well, I think a couple different things. The funding is already there. The labor is there. You know, we came off of some of the lowest unemployment rates. There were people that were looking for jobs, and it was actually to a point where construction was starting to slow down a little bit because of labor cost, because of material cost. That doesn't seem to be the case now. And as I mentioned, the funding is in place. Also, what is quite unique is that, well, it's actually not unique. I take that back. It's very similar to what we saw in 2017, which the type of hotels that we are building are more in the select service, which tend to do a bit better in downturns because their overhead is not so high like a full service hotel. They also are often driven by more transient demand. They're not impacted as much as large group hotels. And that obviously right now, group business, it's really unknown on when that's going to come back and what that's going to look like. So about 71% of the hotels that are currently under construction are in that select service segment. So to answer your question on why is the construction continuing, it's also not expensive to build those properties, as expensive to build those properties as a full service, and they can be opened up faster if needed. So if this was all a luxury build or big boxes, my guess would be we would probably have more deferments and postpones.
And that you're not seeing banks pulling back from extending credit to construction that's in progress because of, and I remember during the last downturn, material adverse changes, right? The projections of everything's changed, so no more construction draws. You're not seeing that?
So that is data that STR does not collect, but what I'm hearing and in panels that I am involved in is that there is a lot of capital out there that is looking to invest in this sector and especially the investment side of multifamily groups that own multifamily are looking to expand their portfolio and are looking to hospitality. So I am hearing that. Now, we don't have any data on that, but that's what I'm hearing from my colleagues.
Well, you're at the epicenter of everything hotels. So being specific about whether you collect the data or not, anecdotal is just fine, Vail. It's totally fine what we're talking about. So just to contextualize something, and I do want to talk about that multifamily thing, so we'll get back to that. But just for those, that one person who's listening that doesn't understand what a 68% drop in revenues means to the hotel industry, just to be clear, break-even levels in hotels are what, north of 70-80% occupancy? I mean, it's super high.
No, on a national level, the break even on average needs to be above 55%.
Okay.
And right now, occupancy for the month of April was 24%.
Okay.
So on a 12-month moving average, or really kind of if we want to look just year to date. So from where we were, January through April, occupancy levels were a little bit higher than, it was 45.7%. So to be able to break even nationally, it needs to be north of 55. Full service, it's going to be closer to 60 to 65%. And then depending on what market you're in, obviously markets such as San Francisco and New York, it needs to be higher than that. So for those listeners, these are numbers on a national level that we have never seen before. It's been like no other downturn than we've ever had before.
Tell me, let's compare it actually directly with the last downturn, the 2007, 2008, which was also catastrophic for the hotel industry. I remember, and I also remember Amanda saying that the hotel industry is one that goes into downturns faster, but also recovers faster, goes in faster and harder, and then recovers faster. So just compare the two, will you just put it into perspective?
Yes. So on your conversation with Amanda, one of the metrics that she says she stated that is really key to the hotel industry is RevPAR, which is revenue per available room. It is one of those metrics as well that leads indication to profitability. Obviously, a lot of management companies and general managers and revenue managers are bonused on that RevPAR number. So to just speak to RevPAR, if we are looking at where the RevPAR decline is year to date through April, it is down 34.3%. So compared to, and for the month, it was down 79.9%. So to compare that to the downturn that we had in the most recent one, the financial crisis, the most extreme month of RevPAR declines we had was little over 20%.
That's
and now
incredible.
We're at
four times that.
Yeah. 4 times that. And if you looked at even what happened after September 11th, the worst month was around 23% decline in RevPAR. So those recoveries were V-shaped, especially in 2001. 2008 took a bit longer. It took about twice as long from a recovery standpoint to get those RevPAR numbers back up. So what we're predicting and what we're forecasting is that likely this will take, so in the past downturns, from the highest peak to the lowest peak, it took about 12 months in 2001 and 19 months in 2009. To recover, to get back to those levels, it took pretty much double that time frame. So 24 months to get levels back up to prior downturn in 2001, and around 37 months to get back to where we were in post 2009. With these declines, it wouldn't be a surprise if we wouldn't start to see occupancy and rate levels to get back up until 2024, potentially into 25.
Really? So let me ask you about that, because if, you know, this is obviously talking head stuff, Vail. I don't want you to, you know, it sounded daft, but, you know, we're all in it together. And I think, you know, if there's a cure or if there's a vaccine, and that's going to happen, you know, some people saying by the end of the year, let's hope so, but more likely, you know, the end of next year. I mean, the second that happens, doesn't that just throw the switch straight back onto full vigor? And I mean, everybody who's been cooped up in their homes for months and months, wanting to get out and go somewhere. You don't see a kind of a decline and then a complete turnaround almost overnight.
So that would be, I mean, that would be best case scenario. I think a couple of different things that would take into play. People are going to have to feel safe. So health is going to dictate just as much as the economic factors. We have to remember we have the largest unemployment rate right now that has hurt people financially. So even if they had the ability today, we all get a vaccination, we're ready to go. So many people have been economically impacted by this. They may not have the means to do it, or they may be so gun shy that, well, what if we have a spike again? What if this vaccination doesn't work? So that confidence level has to be there. So in this recovery, what is going to be key, obviously finding a vaccination or a cure is going to speed it up sooner rather than later. However, making sure that travelers feel not only safe traveling and in their hotel rooms, but that they feel financially safe to be able to do it as well, which is going to be much different. And if you look at the past downturns, in 2001, it was a safety. Do I feel like is there going to be a threat of terrorism? Financially, we were in a better position. And then in the economic downturn, it wasn't a matter of safety to my health or safety to my being, it was a safety of my pocketbook. And it didn't, you know, corporate was still happening. We don't have corporate happening now.
Let's talk about something a little bit different. Let's pivot to a slightly different perspective, actually, because in amongst crisis, which obviously we're in now, particularly the hotel industry really is at the sharp edge of this problem, is opportunity. And you've already mentioned multifamily or apartment financiers or owners taking an interest in hospitality. And your implication was that their interest was to diversify away from 30-day rentals to one-day rentals, right? To move actually into full-on hospitality. But are you seeing any indications of adaptive reuse of hotels, people turning them into apartments, senior housing I've been reading about, other kinds of uses? Are you seeing any kind of trends or indications of that yet?
You know, not yet today, like what we did after Katrina. That was one time where we actually saw a lot of hotels that did not reopen as hotels. They were switched into another type of an asset class. Oftentimes it was either condos or it was office space. So some of the things that we are seeing and that we're hearing is that the one segment that is actually not doing as badly as everybody else right now is extended stay. So that has been a sector that has actually performed a little bit better than some of the others. And the thought is that there are a couple of reasons for that. People are going to go where the jobs are, and they may not be wanting to necessarily stay in a apartment. They may not want to have a 12-month lease or an 18-month lease or things of that nature. Right now with short-term rental, some people feel comfortable with that, others don't. So what we're seeing is that that extended stay hotel product is really becoming appealing. And I think investors potentially see that as well, that that is going to likely be a sector that of our hotel classes that start to do well as people start to travel where the jobs are, as well as in every other downturn, and especially this downturn, what helped drive us out was transient and leisure travel. And that is going to come back. To your point earlier, once people do feel safe, it may not be a sharp V recovery, but it will come back and people will travel with a vengeance. They really will. Whether it will be to see people or friends or family members that they haven't seen, or to really realize, to have a sense of, you know, life is too short and I've got to go and see these things that I need to see because I may not have a chance. You know, I feel like that will come back, and investors know that. And the data is there to prove it. I don't have, and I should definitely, I can follow up with you, but we do have some great profitability data. And it'll be interesting to see, because again, profits are hit so hard right now, and there are hotels that are just operating on skeleton crews, but historically, this has been a segment that has been profitable. And I would foresee that while right now we are not in a profitable state, we will continue to be an asset class that is profitable, and that is also interesting.
And you're making the distinction of profitability in the extended stay.
Extended stay and as in general, this industry is incredibly profitable, historically has been.
And extended stay presumably is weathering the storm a little better because they have kitchens, right?
They have kitchens,
that's a big distinction. So you don't actually have to, you're not, how do you eat when you can't go to a restaurant and et cetera, right? You've got to cook
exactly
food in. So presumably that's helpful.
It is helpful, as well as you've got still some workers and some movement of goods, and an extended stay, if they're going to be in an area for, you know, more than a week, oftentimes it's the products that people are looking for. And to your point, they can bring in their own food, they can cook. It's more isolated.
Now, when you talk about some hotels not opening after Katrina, etc., presumably that's happening now. And I've heard anecdotally, I paraphrase a quote that I heard. Somebody said some hotel owners are already handing their keys back to the bank. So tell me something about what is going on in terms of kind of at the you know, throw your arms up and give up kind of level. And what are you seeing in terms of transactions or transfers to other owners?
So I have not seen any stats on that lately. However, I was just on a panel with a woman by the name of Suzanne Mellon, who is with HBS, who they actually do track transactions and evaluations. And, you know, what they are saying is that they are starting to see that, but really right now, these owners are turning in the asset if they absolutely have to. What we are seeing right now is that there's really a level of trying to get cash, and we've seen the brands be quite creative with getting some cash flow, and that these hotels are operating on skeleton crews and doing what they can to remain open, knowing that when things start to open back, they can ramp up. You know, there will be hotels that don't come back out of this. Absolutely, that will happen.
And what will be what class will that be, do you think? I mean, what type of hotel is that more likely to impact?
That's a good question.
Is it going to be the small boutique hotels?
So I would think if I had to make a guess, it's going to be, I can't imagine it being the big box convention hotels. There's such amazing assets. I do think it could likely be maybe some of the smaller hotels that maybe are not affiliated with a brand, independent probably in nature, maybe in some destinations that don't have strong drive to. There's a lot of destinations out there around the world where the drive market doesn't exist. It's just a small little area and you're not going to drive. So we may see some hotels that permanently shut down. A destination that I love dearly that comes to mind that I actually, have been following is Bermuda, for example. 70% of their, I think the stat was 70% of their community is employed by travel and tourism. That island is 23 miles long, I think, and 5 miles wide. There's no drive market to Bermuda. So airlift and cruise line is huge. So there could be some small little properties that are going to have to, that this could wipe them out. But I can't foresee the big ones that are affiliated with brands, unless it's a matter of selling the asset and it's going to make more money as a different type of asset class.
So actually, that's actually
office space.
Yeah, so I was going to dovetail into the point that you made, that some of the big chains are doing what they can to get cash. So what are they doing to get cash? Are they selling some assets to release cash to protect, like the lower, the lesser performing assets they're getting rid of in order to shore up the rest of the portfolio? Or what are they doing?
Well, I think what we're hearing more is just what they're doing to the consumer base. I mean, they're offering discounts on gift cards, on things in advance to try to get the cash flow in. It's been more of from what I have read and from what I've seen, it's been a lot of on the creative of the marketing side, how to actually get people to be incentivized so that when the travel is back, they will come to a Marriott or Hilton through buying these gift cards or buying other types of packages in advance. So I've seen a lot of that. The unloading of assets I have not heard of yet. I'm sure that's to come.
And then how is the industry showing up? Because my understanding is that especially with the chains, the flagged hotels, those are all franchisees, aren't they, essentially? So but they're operated as independent businesses. So how are the chains supporting franchisees in that way? What are the dynamics there?
I don't have a lot of insights in that, and nor have I. That's oftentimes what the chains will keep quite close to themselves. But I do know that they are looking to support them in their marketing efforts. Whether they're waiving any types of fees, I don't know, and nor have I heard. And to be quite honest, I don't know that they would speak to that anyway. The earnings calls probably will lend to that as we get on into the second area. I think one of the things that they are doing is really creating a sense of safety. There has been a lot, each brand has a theme of coming back. We're here for you. Here's what we're doing to make sure that when we are traveling again, you're safe in our hotel rooms. So that, on a roundabout way, in a direct way too, is helping their franchisees, because that is marketing the brand. Best Western has theirs, IHG has theirs, Hilton and Marriott. And then on top of that, the American Hotel and Lodging Association has done an amazing job in creating a safe stay guidelines that all of the major brands, management companies, ownership companies have signed on to. That is also helping their members and helping their franchise owners. And AHOA is doing the same thing, the Asian American Hotel Owners Association. So that then helps their franchise owners.
Vail, what are you seeing are the best efforts? Let's talk about something really positive. Amongst all this, you've got some very creative people who are working in an industry that during the good times, and even today, brings joy to all their customers. I mean, that's what the hotel industry is about, having a good time away from home and enjoying life. Right. So these are creative, happy, I imagine happy people working in a great industry. So what are you seeing in the industry have surprised you again anecdotally about some of the really cool things people are doing to, kind of shine a brighter light on what's happening?
Well, I think a couple of things in the stories that you hear, and this industry, I don't necessarily know that it's a surprise around the fact of how caring and giving this industry has been during this time. That does not surprise me. Some of the creative ways in which they're doing it, I think, is fascinating. Close to home, I'm going to speak to a local hotel, which I can't name, although I'm sure you can Google it, has done an amazing job here in Nashville, Tennessee, where we have songwriters and we have music is at the core of what this community is about. And they are creating, they used to have, obviously, in their bar and restaurant, singer-songwriter night, where they would have all these local singers and songwriters come and play their shows. And it was a great revenue stream for not only the hotel, but for the songwriters. Well, now that we cannot gather, what they've started to do is drive-in. So they are posting and hosting a stage in their parking lot with the singer and songwriter, and people will drive in. They keep the cars separated out. People can listen to the music. They have curb delivery food and drinks, or they can bring their own. And it's a donation to the songwriter. And it's a way to get people out again in a safe way, supporting singer-songwriters in our community. And oftentimes some of the proceeds will go to the first responders. I think, again, what the hospitality community has done as a whole in helping our first responders has been absolutely unbelievable. And just getting back to a sense of community as well, whether it be with local restaurants, just very creative ways to make people feel safe, to still have an experience, and to support employees and overall entrepreneurs within their communities.
Yeah, I should have asked about that. Just curious. So I've read about a lot of hotels that are providing access to their facilities to first responders. Forgive me for asking a question. It's a little bit crass. I mean, everybody's trying to survive right now, and the hotel industry particularly is struggling to survive, right? A lot of these hotels. Are they really giving away these rooms, or are they receiving some kind of rental income from it through the medical industry or through hospitals or grants or otherwise?
So oftentimes they are getting, yes, some funds for it at an incredibly low rate. Sometimes it's actually through the facilities themselves. So the healthcare facilities are contracting with the hotels. Sometimes it's the city that's attracting or contracting with the hotels, or a third party group. So it is a way of absolutely continuing to keep the operation open and employ people, as well as providing a safe place for the first responders, so that they can, obviously it's sad that they aren't able to be with their family, but that they can protect their family as well. But it depends on how the agreement is made and what the contract is and how it is contracted out, of what types of money is coming in for that room.
Let's change a little bit as we move towards wrapping up, and start talking about what I presume is your area of true expertise, career-based, and that is marketing, right? That's right, global marketing. So you're a very senior person over there at STR. So in terms of marketing, how are hotels, what are you seeing are best practices for hotels today in how they're marketing? What are they doing that's really effective?
I think to go back to the statement of it's a safe place, and to come back and these campaigns that they are doing, to go back to the American Hotel and Lodging Association, which for those listeners who may not know, they are the leading advocates for the American hotel and lodging space. They have created an amazing campaign that is really encouraging people to start to feel safe in traveling again. They are a great umbrella for the overall industry themselves. I think the brands have done a phenomenal job in coming up with these campaigns and really humanizing and making it a sensitive topic of, we are going to be a cleaner, safer place for you to come. We've already been that as an industry, but to really make it that this is going to be an extension of your home, and here is what we are doing in order to make you feel that way. I mean, the way that the campaigns are run, and you can Google all of them, each brand has them, is very creative. It's a very different shift of what it has been in the past, where the forefront of the conversation is about safety. And in past times, it was safety of just, we're here, we're a secure place, you're going to be careful, you know, you're going to be protected in your hotel room, to now the protected of cleanliness. And here's what we're going to do to protect you from the virus. But to come and to experience it and to support the local, it goes back to supporting those local communities. I think that that is what will be quite unique, is that as a world, we can see some beautiful destinations and experience some beautiful hotels, and we can do it within a 400-mile drive or a 400-mile plane ride if we had to.
And it's interesting that you say, I can Google that. What I was interested in knowing was, what are the actual ways that they are marketing? Are they doing advertising?
Oh, yes.
Are they creating social media content? Because I actually haven't seen anything, at least not that I've been aware of. Maybe I will now, but
not a lot on television. You see it a lot on social media. You see it a lot on
is that paid social? Is it Vail?
Yes, some paid, some of it is organic through these associations that they're involved in, whether the conversations are having. They do it through a lot of commentary of, I think nowadays, this type of a Zoom is what's happening all the time. So constantly marketing through, this is what we are doing. It's almost a public announcement statement. So they're utilizing social media, they're utilizing, and I'm assuming television is coming soon. Quite honestly, I haven't had the television on as much because it's quite depressing, but
good for you.
Yeah, but I should, as a marketer, definitely be probably putting the television on more often. But I think it will come, as we've seen it with the food industry, as we've seen it with the retail industry. We will see the television advertisements coming sooner rather than later, absolutely. Social has been probably in the forefront, because everyone's now in front of their computer and on LinkedIn and on Twitter, as more than ever.
Exactly. All right. I tell you what, let's see. I had any more questions I wanted to ask you. I've got three, if I may ask you three sign-off questions. I ask all of my guests, and just because of the what we're going through right now, I'm adapting them slightly.
Yes.
But so the first question, three sign-off, just quick sign-off questions. The first is, for any hotelier listening now, I suppose this should be two, I should ask you, any hotel owner listening now, what's the best advice you could give them, you think?
So I would say some of the best advice would be to really stress test your hotel financial performance. Do several different scenarios of recovery. Best case, likely case, worst case. It's something that hotels are already, smart hoteliers are already doing now. And I know this because they're utilizing the data in which STR provides, and we also have a consulting side of our business that is helping hotels do this. But really stress testing financial performance, I would say, big takeaway.
So you have a division that supports hotels, being dead straight about it. Do you also, for somebody who is listening and wanting to buy hotels today, are there resources or any advice that you can give to them? Any avenues at STR that might be helpful?
I mean, yes, we have. I mean, we track all of the commercial real estate assets of what's for sale. We also have, and that's through our parent company, the CoStar Group. STR has all the hotels that are currently open and what's under construction. We don't necessarily in our system have what's for sale, but we do have that through our parent company, CoStar Group. I would say advice would be to see what distressed assets are out there, but as well, when you're looking at the P&L, to stress test the financials, because it's going to look very different when we open up, and it will take a while to get back to normal times.
Yeah, and you sell data, just for anybody that doesn't know by now,
Yes.
after my introduction before we get here, you sell data about hotels are performing, and you're talking about hotels that are actively for sale. But for somebody who is not a hotelier, can they buy data from STR that might show who might be moving towards a sale?
Yes, absolutely. We do.
Okay.
And I would highly recommend, and we can, to go to the website, because there's also great information, just free information if people are interested. There's webinars, recorded webinars of all over the world of kind of what has started, when COVID started and how things have started to progress. There's a lot of resources there for those listeners who may not be as familiar with the hospitality space, but would like to know what has been happening.
Perfect. And I'll include links for sure to all of that on the thing. Two last questions. What has been, just strictly marketing now, let's get away from all the doom and gloom.
Yep.
Hardest lesson you've learned, this is away from all the gloom and doom. Hardest lesson you've learned in your marketing career as a professional marketer online?
Ooh, I think the biggest lesson is when is it too much information? When are you over communicating to the extent that people stop listening? That has been a real lesson and a balance of this need to feel like you need to inform the industry and educate the industry and share this knowledge to the point that people stop listening. And it just becomes overload. And I think that will end up being a real key thing as we move forward as well, because we will be more in this virtual space now more than ever. I think for a company who has a lot of staff members that travel and pre-COVID did trade shows and big booths and big conferences, to when we start to do post, how many more little handouts are we going to have? Are we going to have brochures anymore? Are we going to have little giveaway gifts? What does that look like? And how can we be creative in what will look like this post world as marketers in those types of business to business, face-to-face meetings?
Last question.
Yes.
Key daily habits that you have that keep you successful online, and you've already confessed to not watching enough television. I wish that was the problem in my house. But online, what are your key daily habits? Yeah.
Shower.
At least once a month, whether you need it or not.
Just shower, people. I think for me, I have used LinkedIn more than ever to stay connected to my business colleagues, and that has become a best practice, a daily practice for me that honestly didn't happen before. Picking up the phone. It doesn't always have to be video. Sometimes just a voice, just while thinking of someone, reaching out to someone. And that has been probably something that I did not do in the past that I'm doing more of, and to a broader group of people. Oftentimes just hearing someone's voice can help us through that. And it oftentimes strikes up a lot of creative thinking and brainstorming. And I think the last thing is I make sure I get outside.
Gosh.
I mean, it's small things, but there's so much creative stuff around us, and that's when I seem to do my best thinking.
What a world we live in.
Yes.
Vail, I'm going to sign off now, but don't go away. Let me just sign off. I've got a couple of other offline things I want to ask you.
Okay.
Vail Ross. It was 3 years ago I spoke to Amanda Height, and she was clearly a wonderful, wonderful woman. I've always believed that the sign of what a company is the people in the company. It's been such a pleasure. It's obvious from talking to her and from you today what an incredible, wonderful place STR is. I really hope wish you all the very, very best. Thank you so much for joining me today during these hard times. I appreciate you coming on today.
Thank you for the invitation.
That was Vail Ross, Senior Vice President of Global Business Development and Marketing at STR. Don't forget, you can find links to Vail and to STR and to all the resources that she mentioned during the podcast on the podcast page for today's episode at gowercrowd.com. And if you want to take advantage of our discounted investor acquisition system master course, please do that as soon as possible, as that promotion is going to be ending very soon. You'll find links to the master course on both the Gower Crowd homepage and on the podcast page for today's episode there at gowercrowd.com. Okay, that's it. Thanks for listening, and thank you, Vail Ross, Senior Vice President of Global Business Development and Marketing at STR. I know these are tough times in the hospitality industry. I'm particularly grateful to you for everything that you do and for having spent your time with me today. That's all for this episode, and I'll see you next time. In the meantime, stay well. And for now, this is Dr. Adam Gower signing off.